Hello, fellow traders. 'Tis I, the Rumpled One. It is Tuesday, June the 2nd. The year's 2020. Let's talk trading. The Rat. I've been receiving inquiries about the Rat. I guess some people are just finding out about me. I guess some from the Trading Nut video and some from my videos, and they hear me talk about the Rat and they want to know a little bit more about the Rat. So that's what we're going to talk about today. But first, I just have to let you know these videos are for educational purposes only, and your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. Okay, the disclaimer is out of the way. And as I always tell you traders, you don't want to lose more than you're willing to lose on any particular trade. That's your risk management. Money management, don't leave pips on the table. Don't be greedy. Your brain management, self management, don't do any of these. Just don't. So for the week, we still have two pairs that have not filled the gap. Okay, but let's get on with the Rat. Now, this is the normal Rat zone chart that I show. And here's a list of the indicators. The main one is the Rat zone. You really don't need any of the others on here. It's the main one. But I also have the smart Rat zone loaded. And I'll explain the difference between the two. So the Rat, what happened was just by observing the daily candle on the pound dollar, I noticed that the wicks were big. And this is, I think, way back in 2008 when I came up with the Rat. You can see it out on where I post my code over on Crestlick.com. Now, so I ran frequency distributions and I found that about, I think it was 80% of the time, the close minus the low at the end of the day, and the high minus the close, that's the length of the wicks, was usually bigger than 20. So to me, it was like, well, after running the frequency distributions and saying that that was true about 80% of the time, it was kind of a no-brainer. Meaning, if I enter a trade in this area, basically 4 out of 5 times it's going to leave that area and close out of that area. So the difference from wherever I enter to that is profit. And the same is true down here. If it enters down here, 4 out of 5 times it's coming out, then once again, that the difference between where I enter, that's all profit. Now, there's something you have to know. The Rat zone is dynamic, meaning, so right here when we first start out the day, there's not enough room because the range isn't large enough. But you see here, we put in a low, and then we put in a high, and then we put in another high. Okay, but this is, some people would say this repaints, but what it does is it's dynamic, because if you leave this up there, these dots will start pushing. But when you just bring it up fresh, it just looks at the current high, current low, and paints the dots. But that's by design. So in this latest example here, you can see the pound was up here, and then it came out. In fact, I took one of those trades for a nice run. So what happens? Tell me more about the Rat. That's what people want to know. Okay, why do I call it the Rat? It's because of an article I read, and it said that there was an experiment between rats and Yale students where they had a T-shaped maze. So, and what they did was they always put the cheese on, actually, they flipped the coin, and it was a 60-40. It was a weighted coin. So 60% of the time, cheese would be on the left-hand side, and 40% cheese would be on the right-hand side. Well, they put the Rat in there, And the rat, after a while, always turned left, just always turned left. So they gave the Yale students the same problem, and they wrote all these fancy higher math formulas, and they only got it right about 52% of the time. So basically, the rat beat the Yale students. So that's why when I call somebody a Yale student, it's me kind of poking fun at them. So how does that benefit you? Well, you pick one. Either you're a green rat or you're a red rat. So when you're a green rat, you always buy. When you're a red rat, you always sell. And you can, so if you're down here, it's smart to be a green rat. If you're up here, it's smart to be a red rat. Sure, price can push higher, but the thing is, once again, educational purposes only, based on statistics, price is going to come down. And so in the normal rat zone, we still have it set at the 20 pips. So between the high of the day and 20 pips, if you enter anywhere in there, you're in the rat zone, and you should look to make money. And down here, it's the low plus 20. Anywhere down here, you would see that you'd be in the green rat zone. You go long, and you should make money by the end of the day. Once again, educational purposes only. Your results may differ from mine. Okay, so what about this smart rat? How did the rat get smarter? Well, what I did was, as opposed to just looking at the frequency distribution and saying, okay, well, 20 pips or more, it's more than that 80% of the time, so I'll just put the number, I'll just set it at 20. I thought, rather than do it that way, how about I use the 20 percentile? So if I have 100 days worth of data and I run the calculation close minus low, and I get a bunch of, I get some 10s and 20s and 30s and 50s and 2s and 8s, and then I sort them. I go, okay, what's the 20? Where is 20? Okay, how far, what's that number? So let's just say, for sake of argument, that number is, well, let's see, in this case, it would be about 14. So that means out of those 100, the lowest 20 were somewhere between 0 and 14. So the smart rat says, okay, I'm going to take the 20 percentile. So I'm going to put my trigger right here at this level. So you can see here, the smart rat actually has it a little less by about 7 pips than the regular rat. Up here, it's almost the same. So in other words, when I did the calculation high minus close, and I calculated all those numbers, and then I sorted them, and I put it at the 20 percentile, this is where that line is drawn. So that's the difference between the rat and the smart rat. So you got to remember, nature evolves. So you can call that the evolved rat if you like. Rat or rat 2.0. Maybe that's what I should have called it. So right here, high minus close, right now it's at the 47 percentile. So in other words, 40, right now it's at 46. So rather than look at the lowest 20, you're looking at the lowest 46s right here. And as far as close minus low, and I'm thinking I should maybe move this over here so it's a little bit clearer. Over here at the 60% level, close minus low, you're at the 60% level. So basically, there's no rat trade here. So when you see this number get below 20, you know it's time for a red rat trade. When you see this number get below 20, you know it's time for a green rat trade. And so this is just giving you this level in a dynamic sense. Now, yesterday I also showed you the smart range and how you would use that. So if we click over to the daily right here, you can see for the high minus close, it's at 46, or now it's at 45. The only difference is this indicator, I gotta let me match them up. I usually use 250 because that's a full year's worth of data, but over here I used 100. So let me just switch it, the test bars to 100. So you can see here, high minus close, 39, 38. That must be a rounding. And then close minus low, 54, 55. So they're within 1 percentile here. So this is basically telling you your rat zone, where the range is or price is within that right now. Okay. Now the other thing here is we talked about the high minus low or the full range. At 98 out of the last 100 days, this is at the 32 percentile. So 32 days were 98 or less, and then 68 days would be 98 or more. So that's almost telling you there's a good chance we might have a little more range there. But when you look at where price is, I probably wouldn't bet on it unless something drastic happened. Now, the other thing to do is, so this is at 32%, but high minus opens at 67 and open minus lows at the 10 percentile, 67 percentile. So do you think it's going to go higher? Maybe. You think it's going to go lower? Well, you don't really know. That's still possible. Anything's still possible until the day's over. But you can use these to gauge. So when this high minus open was way up here, I'm sorry, when the high minus close was up here, you can start looking for the rat reversal. But when you see high minus open at 67 and price is pushing, it's just like, well, there's still more room because it's only at the 67 percentile. Maybe it could go as high as yesterday, 93. Don't know. We had an unbelievable range yesterday. Actually, it was 77%. So it's not that it was unbelievable, but we did have a range that was in the upper quadrant. Now, I hope I'm not talking over anybody's head here because I know frequency distribution statistics and some of those things, percentiles, that might sound, fancy or something, but it's really simple when you think about it, at least to me. But if you have any questions, if I need to go into it a little more, feel free to ask. But the bottom line is that it doesn't really matter what trigger you take here, so long as you go short. So you could have said, look at all these wicks here. So right here, you see these wicks in this area. Well, look what happened over here. You could have just gone short as soon as price crossed that line, coming back down. That would have been easy. Or you could use, usually when I do this, I'm on a 5-minute chart. So let's just switch over here. Hopefully this computer doesn't take all day to do it. And so how would I trade this? Green candle closes, red candle closes. I take the break of this candle's low. So come on, chart. So right here, green candle closes, red candle closes, take the break of the low. You can see there, if you took that break, it tested it. You didn't take much heat, but you would have been able to make a nice profit here. And that's how it works. On the downside, on the bottom, let's see, did we have any? Yeah. Okay, it's going to do that. Well, basically what it is you have a red candle close, green candle, take the break of the green candle. So if these candles were in the zone, red closes, green closes, take the break of the green, but usually if it breaks the red, sometimes I would jump in too. But it would be more like red candle closes, green candle closes, take the break of that green candle, and you go up. And this is probably the best example. Red, green, take the break of the green, and you're off to the races. So, fellow traders, that's more on the rat. I hope that helps. And just remember, it's not what you trade, it's how you trade it. So drain the banks. And if it's your first time, subscribe and like, please.